because it's bearish. These are the 4-hour legs. This is one upside leg. This is one downside leg. This is one upside leg. This is one downside leg. And on the 15-minute chart, it will also look like on the upside legs, creating series of higher highs and higher lows. And on the downside leg, it will create series of lower lows and lower highs. And the main trend turned into bearish from bullish. So you will want to trade the countering side of the market again, which is bearish. So short trades are in control. It means supply is in control. Okay, let's combine more time frames together. So if the 4-hour structure and trend is bullish, it's creating series of higher highs, creating demand zones and breaking through supply zones. The 15-minute will look like this, as I said in the earlier video. So on the first leg of the 4-hour structure, the 15-minute will create series of higher highs and higher lows and demand zones. The second leg of the 4-hour, so the pullback phase, it will create lower lows and lower highs and supply zones. And the third leg, it will create a series of higher highs and higher lows again and demand zones. Okay, let's combine the 15-minute time frame and the 1-minute time frame together. So let's focus on the last leg of the 4-hour. So on the last leg of the 4-hour, it's bullish on the 15-minute, creating series of higher highs and higher lows. And let's focus on this region of the 15-minute chart. As you can see, in this region, price created upside push, break of structure, inefficiency, and the demand zone. After a demand zone has been created, price came back to this zone and created a new high. On the 15-minute, it will look like just 3 simple legs. But on the 1-minute, it will create a series of higher highs and higher lows. And after the 15-minute high point has been reached, the 1-minute chart will reverse and it will create a series of lower lows and lower highs down to this 15-minute demand zone. And as soon as price taps this 15-minute demand zone, here and here, so this zone is the 15-minute zone drew on the 1-minute. So as soon as price taps this zone, we can expect some reversal, change of character to the upside, and the continuation of the original order flow, which is bullish. So this is what we call the expectational order flow. Okay, let's see how can we combine all of the time frames together and use them for our advantage. As I said, the 4-hour is bullish, creating highs and lows, creating demand zones and breaking through supply zones. So the main trend is bullish in this scenario. So this leg is the main trend, this leg is the counter trend. The main trend on the 15-minute will look like this, creating a series of higher highs and higher lows. And the counter trend will look like this, creating lower lows and lower highs until it taps into a 4-hour demand zone, and the 4-hour demand zone reverses the price for the main trend again. Okay, let's focus on this region of the main trend on the 15-minute. So price is creating demand zones over and over again. A new demand zone has been created here, and this demand zone broke structure to the upside with inefficient movement. This region, as I said, will look like this on the 1-minute chart, and we can expect the tap of this 15-minute zone. So this is the 15-minute zone on the 1-minute chart, and we can expect the tap of this zone. And after this zone has been tapped, we can expect the reaction and the reversal. So the continuation of the whole order flow, the whole bullish order flow. But before the zone tap happens, price will reverse on the 1-minute, and it will create a series of lower lows and lower highs down to this region. And after this region has been tapped, price will reverse the price and create a change of character. As I said, we'll talk about change of characters in the entry notes, create a change of character. And after the change of character happened, we can happen in long trade because we know that the overall direction is bullish. So it's safe to enter a bull trade on the 1-minute chart, knowing the higher time frame direction. So let's see another scenario before we take a look at the live examples. So price is in a bullish trend again, creating highs and lows and creating demand zones. After this demand zone has been created after a break of structure and the inefficient movement, the 4-hour chart and the 4-hour price tapped into this zone and reversed the price and created a new high. This tap of the zone and this movement will look like this on the 15-minute chart. So the first upside leg, pro trend leg, will look like this on the 15-minute, and the second downtrend, so the counter trend leg, will look like this on the 15-minute chart, creating series of lower lows and lower highs. Price tapped into this 4-hour demand zone. So this will be the 4-hour demand zone on the 15-minute chart. Price tapped into this zone, and after it broke through the last high point, did a change of character and tap into this 15-minute demand zone and reverse the price. And this movement will be this leg. This movement will create a new high. Okay, let's break down this step of the zone on the 1-minute chart. So after the 15-minute change of character and the 15-minute demand zone has been created, price tapped into this zone, and this upside movement will look like this on the 1-minute chart, and this downside movement will look like this on the 1-minute chart also, creating a series of lower lows and lower highs. So after the tap of this 15-minute zone happened, here also on the 1-minute, price will change character on the 1-minute also. So break through the last high point, change of character, it will create a demand zone. And after the change of character, you can mark your demand zone out, hop in a trade on this demand zone, so hop in a long trade. And you can write the expectational order flow, which is this one, because it's bullish in this case.